The Securities and Exchange Commission (SEC) hereby informs the general public that shareholders that are yet to register for the ongoing free e-dividend registration should approach their banks or registrars to mandate the bank accounts for the collection of their dividend electronically, including unclaimed dividends not exceeding 12 years of issue. The free registration sponsored by SEC closes on 31st December 2017. Furthermore, investors that bought shares of the same company during public offers using different names are given forbearance up till 31st December 2017 to approach their stockbrokers or registrars to regularize their shareholdings in line with the Securities and Exchange Commission's rules on customer identification. Thereafter, all shares not regularized shall be transferred on trust to the Capital Market Development Fund. These are part of the Securities and Exchange Commission's initiative to further improve investors' benefit and confidence in the Nigerian capital market.
Alright, welcome back. You still on to Market Pulse on your preferred People's Television, and this is the discussion segment. Following deliberations from the just concluded Securities and Exchange Commission budget seminar held in Lagos, which focused on the prospects and opportunities of the 2018 budget of consolidation for the Nigerian capital market. Well, it's against this backdrop today on this episode of Market Pulse, we'll be looking at the 2018 budget, its benefit to the Nigerian capital market. And with me in the studio with Egwu Okwudili. He is the Vice President of Cowry Asset Management Limited. He's a man of immense capacity in the financial service industry. And as you know, I always bring to you the finest minds you can find in the business world. Welcome to Market Pulse.
My pleasure being here.
All right, let's look at the 2018 budget of consolidation. Many call it an over-ambitious budget. For you, what's your take?
Given the enormity of the infrastructural challenge that we do have in the country, I don't think it's an overambitious budget.
Okay.
My only challenge is if the budget assumptions and the budget revenue projections will be met. Taking into consideration that in 2017, most of the physical revenue that we expected did not come as at when due, and that's a challenge that we have in implementing the capital budget component of 2017. But given that they've taken some measures to remedy the revenue shortfall by restructuring the joint venture agreements, so that we can have some kind of equity release that will be cash injection into the budget, and by also outlining some national assets for sale, and increasing taxation on alcoholic drinks and some luxurious items. So we do expect that there will be greater revenue sources to be able to fund the budget.
But taking the cue from 2017 budget, we discovered it was not implemented up to 50%. So talking about 2018 budget, how feasible it is when it comes to when we talk about implementation?
Now, why the budget was not implemented? Because largely to revenue sources, revenue shortfall.
Okay.
Which I said that the extra measures has been taken to address some of the revenue shortfall, like the assets that I mentioned, three power generating assets have been outlined to be sold and will be concluded before the end of first quarter.
Okay.
That will bring in additional funds that the federal government can play around with. And then the JV joint venture agreement with the oil producing. Nigeria, for every oil producing block, Nigeria is a joint venture. It's a majority joint venture. They may not be the operating entity, but they are a joint venture. They can reduce their stake in those joint ventures, and that will automatically release additional money that they will use to fund capital.
All right, let's look at the thrust of our discussion today, basically. Looking at the capital market, the Nigerian capital market. Now, taking a cue from the 2018 budget and the projections so far we've seen in the budget, how best do you think the Nigerian capital market can benefit from the budget to help grow the economy?
The capital market will benefit a lot if the budget is implemented as desired and as planned.
Okay.
Now, if it is implemented, there will be greater economic activity in the country.
Okay.
That will lead to greater outputs, greater profitability by the listed companies, greater disposable income. Greater disposable income will mean greater turnover by these companies. Greater turnover should ordinarily translate to greater profit. So the companies listed will do well, and that will lead to greater dividends for shareholders. You know, but by and large, if you are talking about the equities market, for instance, we can begin to highlight certain sectors that will directly benefit by the allocations.
Yeah, various allocations from the budget.
From the budget to these sectors.
Yeah.
Let's take, for instance, the agricultural sector. The government is focusing more and more on the agricultural sector in order to ensure that we have food security, and that we produce what we eat, not just importing.
Yes.
And I've seen the positive outcome from the intervention in rice, the intervention in wheat, and the CBN Accord program is really doing,
they're doing great. Yeah.
So we begin to see drop in the quantum and the quantity of rice that is being imported from Thailand to Nigeria. You know, so, and we are beginning to see more local rice.
Yes.
More available.
Yes.
So also for the oil palm plantation, the mere fact that crude palm oil, CPO, is among the restricted 41 items, that has encouraged a lot of people to go into palm plantation and palm produce. And we'll begin to see the likes of Okumu Oil and Presco, listed companies in that sector, beginning to have better demands, better profitability, and now they are leading stars in the stock exchange because of the performance and the faith the public have in it. Now, also, feedstocks, for the livestock industry, we're going to see increase in the purchase of raw materials from local sourcing. Feed meals for fisheries is now locally produced, no longer imported. So we see that companies, whether listed or non-listed, are going to benefit from this increased focus on agriculture.
Yes.
And it's becoming to be seen, agriculture is going to become or packaged to be as attractive as possible as a business, so that people
attracts foreign investors as well,
and also engage our youths.
Yes, that's true. All right, let's look at recently we had the Minister of Finance came at the ocean talking about refinancing deficits, and this will be done by loans being gotten from God knows nowhere. But talking about refinancing the deficit of the budget, some experts have argued that it should not just stop there, but the government should also look at infrastructure. And how can infrastructure actually be stabilized in the country? These can also be channeled through the capital market, through the instrumentalities of the capital market. Now, do you agree with this basis, this little analysis?
Now, the key thing, when the Minister of Finance talked about refinancing of local debt, refinancing of the federal government debt obligations, their strategy, which is what we've seen now, is that we see the federal government is borrowing so much from the local market, and total domestic debt is of almost 19 trillion naira.
Yeah, that's true.
And they are crowding out the private sector.
Exactly.
So what they have done so far is to say, okay, let's go and borrow long term from external sources.
Okay.
Outside Nigeria. And currently they are doing a 3 billion euro bonds in 2 tranches, a 15-year at 6.6%, and a 30-year at 7.3%, and which is almost been oversubscribed. The book building is on today and will close on the 28th of November. So with that 3 billion, they would refinance and settle maturing treasury bill obligations. So the federal government may not just come and borrow again from the treasury bill market in the same quantum they have been borrowing. So now that will free
the domestic
the domestic debt obligations.
Yes. And
if we expect that about 500 billion will mature in the next 3 months, that 500 billion will be a new liquidity in the banking system that the bank can now use to finance the real sector and the private sector. Because for government will no longer come and borrow at any cutthroat rates, because now they already have external funding, so they are not under pressure to borrow as they had been doing. So that's the concept of refinancing they've been talking about. So is to ensure that the government does not crowd out the private sector from the credit market.
But
As regards infrastructure,
yes,
we have a lot of infrastructure deficit in the country.
Yes,
and I don't think government have the capacity to tackle the infrastructure challenges we have. Government can quickly address those infrastructure challenges by attracting the private capital.
Okay.
Roads, the railway, the seaports, power, all these utilities can be funded with private money.
Okay.
But the private money can only come when they are assured or guaranteed of comfort that they can recoup their money. So we should look at how government can work with Infrastructure Regulatory Commission and other stakeholders to package some of these infrastructures as PPP.
Okay.
And have special purpose vehicles that can list some of those project specific infrastructure specific bonds or for bonds that investors can buy in and fund. That's the only way we can address the infrastructure challenge. And the capital market is well positioned to come up with either infrastructure bonds or infrastructure funds. Already there are infrastructure bonds in the market that has been promoted by some investment firms. They are listed in the FMDQ that infrastructure that can fund infrastructure projects. So we have almost 7 trillion in pension assets. We have institutional investors and foreign investors who are ready to fund infrastructure projects, but they are concerned about the comfort, because realize
recoup their money back.
If the pension asset, for instance, are answerable to retirees,
yes,
and the contributors, so they don't want to risk contributors' money. So if we have product that gives that level of comfort, that the cash flows from those projects can pay back the loan and can service the obligations as expected, we will see funds coming in to fund infrastructure projects.
But when do you think we can get to that point, that position, that level in the Nigerian capital market where funds can be mobilized?
It's already happening. It's already beginning to happen. It just will get more deepened.
Okay.
It's just deepening and the awareness and the fact that the government can begin to say, okay, we can look in this direction. I understand that Apapa Road to up to Oroshoki is being funded and financed by Dangote. That's the private sector. But in return, he has an agreement and understanding with the federal government that his tax obligations will be used to offset.
Okay.
That's arrangement is in place already.
And that's what you explained earlier.
That's one of the avenues to fund.
Yes.
We could have several models imitating what Dangote is doing. We could have pool of funds doing the same, but in this case it's tied to companies already existing who have tax to pay. But instead of paying the tax, let the part they should only have paid to government be used to fund this project. That will help every other person also help their own business. If you talk about housing, means what are the requirements for housing? That means they will consume more cement, they will consume more concrete aggregates, they will consume more reinforcement rods. So who are the companies that will supply this input into the construction sector? Okay. So that's how to analyze the impact it will have
on the capital market.
On the capital market.
Okay. All right. I've been speaking with the Vice President of Cowry Asset Management Limited, no other person than Okwudili Egwu. He is a man of many years' experience in the financial service industry. Many thanks for having you joining us on Market Pulse. Your analyses are fantastic, I must say. Thank you.
All
right, with this, we call it the wrap on today's episode of Market Pulse. We have been looking at how the 2018 budget of consolidation can affect the Nigerian capital market positively, and you've heard it all. That's just the way it is. We're so optimistic, and we expect that 2018 budgets will have greater impacts in the Nigerian capital market. And as an investor, make sure you are ready to actually fix yourself at the right point and at the right time. Alright, with this we call it the wrap up on today's episode of Market Pulse. I remain your host, Gabriel Nisi.